Hi, I'm Nupur Kumar, the managing partner at Fact Professional, and once again, I'm here with Pooja Sohi and Avdeep Kaur, the co-founders of Core Family Office. Thank you both so much for being here.
Pleasure.
All right, so obviously we discussed a few things last time, and we have more to discuss today. So today we're going to talk about Opportunity Zone funding. There's a lot to discuss, so let's jump right in. Would you be able to start with a quick summary of what qualified Opportunity Zone funds are for those who may not know?
Absolutely. There's a vast majority of people who actually don't know how and what these things are, and even if they're showing up as tax strategies and why they are such. So from 2017, Congress actually approved this legislation.
That's from the Tax Cuts and Jobs Act, I believe.
Yeah, exactly. So amongst other things, the OZ fund was a part of it. And the idea was that they wanted funds to be redirected towards socioeconomic need zones, right? So for example, Inglewood in California is a great example. Inglewood had started off as a low-income area, and now, as we all know, it's gentrified, it's actively booming, expanding. It's a great way to invest your money for the long term. And the fund basically gets you the opportunity of not directly owning the asset, but to put your money away in a fund that owns the asset for you. So not all your eggs are in that one home or in that one multifamily property, but your eggs are in a different basket that holds many other properties, right? So each fund can have its own expertise, but the overall tax benefits that they're offering is supposed to attract investors that are accredited and or qualified or high net worth individuals. So that's like a brief analysis from what an OZ fund is.
Interesting. Okay, very cool. So it's kind of like on a much bigger scale than I think that I realized initially. How does the program work?
So basically, let's say you have $1 million in capital gains that you're sitting on and you have to pay taxes on that, but you don't want to pay taxes on it. What do you do?
Right.
Yeah, who wants to pay it? So this is an opportunity zone fund that you can put your capital gains in because it's only for capital gains. You cannot put any principal in it at all. So any capital gains that you want to defer, you are able to put it in the opportunity zone fund. Mm-hmm. It goes into the fund for 10 years. On the 6th year, you get a step-up basis of 10%, and you have to pay your taxation at that point. So instead of $1 million, let's say if you did put $1 million in, instead of paying a taxation on $1 million, you would be paying it on $900,000 instead. Then on the 10th year, when the fund is done and you're exiting out of the fund, any gains that you get at that point are income tax free.
So basically what happens is when you look at an OZ fund for a long-term strategy, it actually works out great to be a part of your exposure to real estate without actually being physically in real estate and being a landlord yourself. And it gives you all these great deferrals and step-up bases.
Yeah, you get 3 different incentives for being in an opportunity zone fund. So you defer your taxes for 6 years. Mm-hmm. You get a step-up basis on the 6th year for 10%. Mm-hmm. And then at the end of the 10 years, you eliminate any capital gains that you have at that point.
Yeah, it's very attractive.
Yes.
Does that make sense? Did we explain that correctly? It gets complicated. I don't want to be too dense.
Yes.
We can do a high view conversation and then we can get in deeper with individual clients. But these things apply with every single client out there.
Right, and this will be unique on a person to person basis because
yes, it is.
So much to kind of calculate and evaluate. But I think that just knowing that there's a lot of tax savings that you can still potentially have when you do have capital gains tax is so valuable because we've been talking about how do you decrease taxes on stocks that you sell, and there's been so much activity in the stock market this year. And then so beyond that, I would love for you to elaborate a little bit more on how does an opportunity zone fund investment provide specifically tax savings?
So again, you get 3 different incentives for being in an opportunity fund zone. You get the deferral of your taxation. So this works really great for people who have ESOPs.
Okay,
right? Because
that's really good to know.
People with ESOPs, they don't know how to get rid of those capital gains taxes that they're going to be paying. Right. This is a great opportunity for you to utilize to get rid of some of your gains at that point. Right. Anyone that's in the stock market, whether it's short-term gains, long-term gains, it can be utilized for either of them. On the 6th year, you get a reduction. You get a step-up basis of 10%.
Okay.
And then at the end of the 10th year, any gains that you get on top of what you've already put in, you eliminate that taxation, that income tax right there.
So who qualifies for things like this? So anyone who has done a real estate sale, a business sale, any kind, you don't have to necessarily go like to like products.
Right.
You can go into an opportunity zone fund for that exposure. So for example, what's very popular is a gas station that owns the business and the land together, but wants to be sold separately. You can literally separate those sales and take one part of it and put it in an opportunity fund zone. The idea is how, if it's going to be valuable for the client or not, which is what our job is, right? As your family office and as tax professional steps in, and that's our job to vet the potential of new savings.
Exactly.
Taxes.
Interesting. So I think that one question is, what does an individual have to do after they actually make that investment in order to remain qualified for those savings? Do they have to continuously have this type of activity? For example, capital gains, on stocks, they have to continue selling stocks. How do they stay qualified in this type?
Only when they're going into the fund is when they need to be qualified. Once they're in the fund, they don't need to still continue to have those type of gains coming in, because it's going to be from a year-to-year basis. So every year, if let's say the following year they again have $1 million in taxation due, they can go into another opportunity fund
or another strategy.
I mean, it really depends on what you want to go and which way you want to do it. But there's so many strategies out there that we can work with. And at Core Family Office, that's the best thing, because we have over 50 different types of strategies that we can work with depending on what your needs are.
And as we explore these videos more, our next one should be about deferred sales strategy.
Yes.
A DST is a great strategy we can talk about, but that's for 2021 taxes. Why we wanted to talk about Opportunity Fund with you and your clients today, the whole idea was that past October 2020, you can still take those capital gains and put it in the OZ fund and still feel the tax relief that you need for it right now.
Yes.
So that's why we're discussing this today, because there's
that's a really great point. That obviously we're in a situation where we're in 2021, we're way beyond tax season, and now we have to figure out exactly how to kind of account for all of these taxes that have come up over the years. So that's a really great point.
Right. Exactly. So we can do that with the OZ fund. I mean, this is the only really actively moving fund, because it's treated like a 1031 exchange. You can literally have, within that 180-day period, you can make that exchange into this fund. As long as you qualify in that period of time, you don't have to wait 1 year or next year to make these types of investments. And what we usually recommend is that the client is aware that when you put in your money in the OZ fund, it doesn't completely eliminate your tax responsibility. There is still tax responsibility there. You will still have some function of taxation that you would have to pay. A lot of people think that there's no taxes to be paid if I put my entire.
You still have taxation to pay.
Right, that would be beautiful, but
all year long.
But can you save $1 million in taxes at a time? Absolutely. Can you save more than that? Absolutely. Depends on client to client.
Yes.
Well, that's a good point. The factor is, how do we reduce the taxes, not just completely avoid taxes? And at the end of the day, this is a really good way to reduce the taxes and to invest in the long term, especially when you have those gains. So then beyond that, how long does an investor actually have to invest their capital gains? Did you I know you already kind of touched base on it.
So from the time that they realize the gains, you have 180 days to make that transition into an OZ fund.
Okay.
So people for 2020, early 2020, because of COVID, the government had actually extended the time frame for when you could put money into that fund. So we literally had till March 31st for anyone who had gains from October 2019 to October 1st of 2020 to put into the fund by March 31st. Obviously, that time is up, but anyone who has gains after October the 4th, 2020, still has time to put money into the fund by, I think, mid-April to still put money into the fund to still defer some taxation.
So we have a few weeks left, essentially.
Yeah, literally.
Good point. Are there any cons for this type of program?
Absolutely. Everything has a con. There's nothing that's guaranteed out there.
These are all speculative products, right? So when we talk about what is the risk, it's the same like your 401k. It's the same as your mutual funds. There's no guarantee with these products. We're not talking about insurance. We're not talking about whole life.
Right.
No annuities, right? This is not the product that gives you guarantees. And that is why it's so important to qualify the right type of client. So the biggest con is, can your money disappear? Can it go to zero? Absolutely. Absolutely. Right. That's why you have to be so careful in who you're dealing with, what you're dealing with, and understanding this product before you commit to it.
Yes.
That's a really, yeah, at the end of the day, there's only so much that we cannot guarantee anything, but that's a good point,
Right.
is that, you have to
And
do
it's
this
a
with a lot of
long-term
awareness.
hold.
Yeah.
So you have to be aware of that also, that you are putting your money in there for 10 years.
Yeah,
It's,
this is
it's not
not-
something that you can liquidate when you feel like it. Because then
Right.
there will be more tax consequences at that point then.
It's like committing to a contract and then saying, I'm not gonna go,
Yeah.
I'm not gonna do this. I changed my mind. Of course, there's gonna be consequences, And so
Yeah.
that's why if the person's not comfortable with that 10-year time period and or being a part of the speculative market, then this is
not for you.
Yeah.
All right, that's a good point. That's I do think that that's a good idea of what a con would be, is knowing that if you don't really think that this is something you want to look at long term, and you're not comfortable sitting back and just watching it and not touching it for a little while, then it may not be a good opportunity to go into.
Talking about the cons, the first 4 years, this fund doesn't provide any income, right? So there are funds out there, mutual funds out there that provide income. Right? So this fund will not provide you income in the first 4 or 5 years, depending on the type of opportunity fund you're dealing with. Your income normally starts around the 5th year, right? And by the way, this income, because of your step-out basis, will also be tax-free.
Yes.
Right. So this is a pro, but hidden under a con. Exactly. It starts in past your 4 years, 5 years mark.
Yeah.
It's still a long-term investment, but
Yes.
it does provide income.
Eventually, it will provide you income.
Interesting, very interesting. So how can an individual get started with investing in these funds?
It's really easy. You just have to contact Fact Professional or Core Family Office and go from there. Even if you try to reach these funds directly, they would want you to be properly represented with your CPA and your financial advisor. This is a part of the service we provide, along with offsetting your taxation in the 6th year. So we're a team here to help, and contact us any which way you want. Right, we're always social media available. Plus, our website is always easy to reach us. Basically.
Awesome. All right. Well, thank you so much for joining us today. It was great to talk to both of you about this exciting kind of avenue and learning how to save taxes. If anyone wants to get in touch with Bujit Amrit, we'll be posting their contact information in the video description below. And make sure you subscribe to the Fact Professional Inc. Accounting YouTube channel for more helpful information. We'll see you next time.
Oh, also, just before we sign off, we are going to be having a webinar on the Opportunity Fund Zone next week at 12 o'clock on Friday. So if anyone wants to attend, they can definitely either contact you guys and let you know that they want to attend, or contact us directly, and we'll add them onto the list.
That's awesome. Great. So we'll include that information below as well, so that you can get some more information. That's really awesome. And obviously, we don't have a lot of time left, so this is a great time to really get that information out there. Thank you both so much.